Hey everybody, welcome to VerifiedInvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, what I look at here, we're going to look at Microsoft's daily, weekly, and monthly chart to decipher whether this stock has topped and potential implications for the rest of the tech sector. And remember, folks, here at Verified Investing, it's no BS, just charts and data, which give us probabilities to make wise decisions. And that, again, will build wealth over time. All right, into the charts we go here. We take a look at the daily Microsoft chart. Now, the first thing that I want to point out here on the daily is that from this gap up right here, there's a trend line that really connects through all the lows, right? And this is something that caught my eye in the last week. And I want to show you guys this, right? So essentially you have low, all right, to exact low here and right there, and even right through here, multiple hits. And then notice what's happened here. We closed below and we've now had trouble getting back above. Prices staying below this trend line. And so just in the near term, just like the term trend line makes you think, right? It's a trend. The trend going back to May has now broken. And that again gives me a negative short-term bias on the chart. Now, listen, just because there's a negative bias on this chart as I erase these arrows to clean up the chart, it doesn't mean that the stock is going to go straight down. In fact, I would dare say that gap fill from that earnings gap up, you probably get a bounce around 514, right? So again, gap fill, it would fill the gap from earnings. Gap fill oftentimes gives us technical support levels. You probably get a bounce, maybe even back up to this trend line, but then you would expect another roll over. All right, so near term, short term, negative down to about 514, then likely a bounce. And then from that bounce, you would expect further downside. Once again, that bounce concludes maybe as high as a retrace to that trend line. All right, now let's take a look at other factors. So the first thing that catches my eye as a technical trader is this candle here. This was on good news. They had rock star earnings. The stock was up 8-9% after hours going into the open, and it promptly sold off almost nonstop from that gap up. Now that anytime, and this is a very good lesson to remember, folks, is when stocks have great news and they gap higher and then promptly sell off, that's a bearish indicator. Vice versa, if a stock has horrible news and it gaps down, but then rallies all the way back, that's very, very bullish on the charts. And essentially, what you're tracking there is institutional money flow. So when a stock gaps up like it did on Microsoft, and you have a big sell-off, that is institutional selling. It's not mom and pop saying, oh, wait a minute, this has gone too far. Mom and pops are looking at the chart, the earnings, and they're saying, wow, these were great. This is gapping up. I'm so bullish, right? Institutions are saying, wait a minute, this has gone way too far too fast. Valuation is out of whack. Let's dump into that. They're using that as exit liquidity from retail investors. Vice versa, when you have really bad news and a stock gaps lower, retail is panicking and dumping, while institutions are saying, wait, let's look at the numbers here. This is valuation-wise makes sense. Let's start buying up all these shares that are getting dumped by retail investors. So really important to understand the difference there. All right, now next, what we want to do, so we have a potential longer-term top signal there, and we've broken the upsloping trend line. We know short-term there might only be a little bit more downside until we get a small bounce at gap fill, but then again, after a bounce, we would expect further downside. Now, again, this top is not arbitrary. A lot of people say, oh man, that gap up, and how did we know that it was going to have trouble on this gap up? And I'm going to show you a reason why, and it's pretty darn cool. So I'm going to my weekly chart. And what we're going to do is we're going to take our COVID low, okay? We're going to put a trend line starting at the COVID low. So remember, I'm not just taking an arbitrary low. I mean, this was the low of COVID, one of the most insane periods in recent history in the markets. And we're going to take that and we're going to extend it to the previous all-time high from 2024 right here. Now, if I extend that out, look at what we get. We get the high from that gap up. And I can flip over to this chart as well. Look at that. Boom, right into that line on the daily chart. Now I'll flip back to the weekly chart. But again, this has me saying this could be more than just a short-term pullback. And obviously, we talked about the bounces that will naturally occur. But we could be looking at Microsoft as a major high pivot here for a cycle high. And you could argue 2024, again, there was a 26% correction here to the downside. And now, again, you could argue that Microsoft's even more extended to the upside, so maybe even a further correction. Now, let's talk about something else here. So, number one, let's go back even further. You guys know I love looking at bigger time frames. Let's go back to the dot-com run, okay? So, if we look at the dot-com run, when did Microsoft really start its incline? And I know it's really hard to see here, but really you could argue that you started back in, let's say 90. I mean, really right around here is when you started to make a move, like 91, 92. So let's say it's 8+ years, right? Around 8 years from the beginning of this bull run in 91 to 92, maybe right here it starts in late 91 to 92. And it just continued, right? Continued up, 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 and it continued until the peak in Microsoft. Now, one of the keys that I look for, and I'm a big believer in cycles. Remember, cycles are market psychology or human nature. Remember, in general, history doesn't always repeat, but it often rhymes. And so it doesn't mean that it's going to be to the day or even to the week or the month. But in general, if you look at Microsoft starting in the early 90s and the run that took it to the 2000 dot-com high, that's approximately 8 years, give or take, right? Maybe even a little bit more, maybe 8 to 9 years. Okay. Now, what I look for here is going to the current period, and we say, okay, well, on Microsoft, what do we have here? Let's go to the most recent period. And when did the bull run really start on Microsoft, right? And you could argue that I would say right in here is when it really, I mean, here is a lot of chop, and then here it really just starts to incline and go higher and higher and higher. So let's say 2016. Now, what did we just dissect from Microsoft in the dot-com era? Do you guys remember? So we said 8 to 9 years is what it took for Microsoft to start its bull run and conclude to its dot-com high. So now, if we look at this chart on Microsoft and we say, okay, in 2016, that was the beginning of this bull run, I would say starting right here in July of 2016. And again, we have now pushed up, 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 up. And what year are we in now? We're in 2025. That is about 9 years. So literally, we saw 8, I would say almost 9 years, the dot-com run. And then here we are again, we're 9 years, a 9-year cycle here. And again, what that does is it makes me think this could be a major cycle high on Microsoft. Now let's talk about pullbacks. Like, where do you start to say, okay, maybe we have a pullback? Where do we start to look to leg back into Microsoft if it declines? And what I would do is I'd start looking at longer term trend lines, right? So again, this would be one that I would catch. And again, this is contingent on it being a cycle high. In other words, in the dot-com era, we had about a 66% decline in Microsoft. And so the idea is, well, if we had a 66% decline, number one, it would probably be even lower than here. But let's just be conservative and say, okay, well, where would this price? This is around $300. From the highs, this would be a decline of 45%. And again, I think it's important to understand is that by no means does it have to go 66%. It's just that's what happened in the dot-com era. But there's a lot more money in the system. We know the Fed is going to be printing like crazy if we ever get that decline. And so it makes sense that Microsoft probably in this pullback cycle wouldn't go down quite as much. It's a much more established company than it was in the dot-com era when it was somewhat on the newer side of companies. And so really a 45% correction could be very, very intriguing. And again, by no means, I want to stress this, it doesn't mean that it's going to do that. It doesn't mean that it's guaranteed. There's nothing guaranteed in trading or investing. What I'm trying to do is trying to say, okay, if we have a cycle top, a 9-year cycle top, repetitive cycle top, then where would a big pullback, where would I start legging in or dollar cost averaging in on Microsoft? And really, honestly, 300-ish, give or take, looks to be that level. And then what I would do is, of course, and this is what I always do, I always recommend never going all in on your first buy, right? I like to divide my entries into at least 4 to 5 entries and then spacing them out. So like on Microsoft, I'd probably space it out every 10% lower. And so starting at 300, inching in a 1/4 or 1/5, then adding 10% lower, 10%. This way, again, if it goes lower, which oftentimes during bear markets and freak out periods, things go a lot lower. Just like in bull markets, things go a lot higher than you ever think they go. That gives you the opportunity to dollar cost average and bring in that average on a great company in U.S. history here. One of the best, if not right up there in the top, probably top 5 best companies of all time. All right. So that's the analysis here. I hope you found it useful. I love this stuff. I love looking back at previous cycles. It fascinates me. And again, it's all about understanding that human nature doesn't change. And when you're looking at a chart, you're looking at human nature. And you might say, well, why? It's price action. Well, yeah, but it's made up of people that are bullish and greedy, meaning they're buying because they think it's going to go higher, or they're fearful and they're selling because they think it's going to go lower. So it's greed and fear. A chart is really representation of greed and fear. And so again, it doesn't matter if it's Bitcoin or Microsoft or Nvidia or gold or anything. It moves on greed and fear, right? It moves on emotion. And therefore, charts can be very insightful to help us understand where moves can go and when things are topping. And that's what I'm doing here for you guys. So don't forget, guys, come to verifiedinvesting.com. Check out smart money stocks and ETFs where you get swing trade alerts on stocks, my exact entries and exits. Awesome stuff here. Thank you so much for spending time with me today. Have a great one. Take care.